Okay, so very good evening, friends. And today we have gathered here to discuss on the recent changes in GST with specific reference to fake invoicing issues. The year has been a very, let me tell you, action-packed year because the year started, the first day of the year started with basically notification of many big changes in the GST regime. Contractors faced many new changes, and there were a variety of changes which were introduced in the GST. Recently, the GST Council, the 47th GST Council meeting was held, and a variety of decisions were taken in the meeting. We expected that these will be implemented, but we never expected that this will be implemented so soon. The notifications for the decisions started pouring in, and some days after came some big notifications, and the notifications were regarding rate. I shall start my deliberation with the rate notifications, because that is the area which is the most talked about in the state, in the country now. Rate, there were some exempted goods which were made taxable with effect from 18/7/2022. The most controversial among them was agricultural products like pulses, rice, all types of cereals, curd, lassi, buttermilk. These are also one of the items which are the most talked about. Exemption is still there, but what the law did is that earlier there was the concept of brand name, registered brand name, that if the vendor holds a registered brand name, then it will be taxable. If it is not a registered brand name, if he's selling without any registered brand name, then it will be exempt. But now what the government did, it has done away with the concept of registered brand name, and it has introduced another concept, that is pre-packaged and labeled goods. In my presentation, you can look as in the last part of every line other than pre-packaged and labeled. So this is the amendment which has occurred, and it has taken effect from 18/07/2022. So suppose let us take the example of pulses. If it is pre-packaged and labeled, then 5% GST will be applicable. If it is not pre-packaged and labeled, GST will not be applicable and it will be exempt. So now let us understand as to what is pre-packaged and labeled, because that is the main area where litigations will arise. So let us understand this. What does the law says about it? The law says that the expression pre-packaged and labeled means a pre-packaged commodity as defined in Legal Metrology Act, where the package is pre-packaged, pre-packed or labeled secured. I'll explain you what happens. This notification has defined this pre-packed and labeled commodity, and it is linked it with the Legal Metrology Act, wherein it says that the definition of pre-packed and labeled means a pre-packed commodity which is defined in Legal Metrology Act, and where the package is pre-packed or a label is affixed thereto. So now a huge buzz was created as to what is a pre-packed and labeled commodity, whether 25 kg, whether 50 kg, what is the exact specification of a pre-packed and labeled commodity. But then on 17th of July, that is just one day before the application of the notification, the CBIC came up with a set of FAQs. Mind it, they are FAQs, they are not circulars or notifications, they are FAQs that They are basically clarificatory in nature and they are not binding on either the SSC or the department. However, we expect that the field formations will pay due respect to the FAQs, and we do not expect that anything wrong will happen with that. But yes, there is still a chance. So, what did the notification say, and what did the Legal Metrology Act say about it? See, there are two conditions. It has to be pre-packed and it has to bear the declarations under the Legal Metrology Act. So both the conditions have to be satisfied. Now, what the Legal Metrology Act says, I'll explain it to you in plain language. The technical language is given in my presentation. Suppose you have suppose you visit a shop. You have to purchase 1 kg of rice. You ask the vendor that, sir, I have to purchase 1 kg of rice. What the vendor does, he has a pre-packaged rice of 1 kg. He just picks it up and hands it over to you. So as per the definition of pre-packaged commodity given in Legal Metrology Act, that commodity will be treated as a pre-packaged commodity. However, if when you ask for the rice, he packs the rice in front of you, he weighs the package, he weighs it to 1 kg and then hands it over to you, that package will not be considered as a pre-packaged commodity. So, pre-packaged commodity is very clear. Further, if some commodity does not require any declaration or compliance under the Legal Metrology Act, that means if the Legal Metrology Act does not require a product to contain any declaration in its label, then it will not be treated as a pre-packaged and pre-labeled commodity. And the law is very clear about it now. So we have to clearly understand these definitions, otherwise we might be in a problem. If there are any queries, it can be asked. I'll be replying it continuously. We have no issue. Yes. Let us take some instances. If the package is of 10 kg, okay, let me tell you one more thing. The Legal Metrology Act, Rule 3 says that a pre-packaged commodity above 25 kg is not covered under the rules of Legal Metrology Act. So, if the package is of 26 kg or 30 kg or 50 kg, it will not be required to comply with the provisions of the Legal Metrology Act, and thus it doesn't fall within the definition of pre-packaged and pre-labeled commodity. And this was clarified by the FAQs issued by the government. There was one more issue, because Rule 24 of the Legal Metrology Act speaks about agricultural produce, wherein it was said that package above 50 kg of agricultural produce is exempted. So there was again a confusion that whether in case of agricultural commodity, the quantity will be taken as 25 kg or 50 kg in case of agricultural commodity. So this FAQ clarified this thing also, and it said no, in case of all types of commodities, this will be considered as pre-packaged, and this will be considered as 25 kg. 50 kg will not be taken in case of pre-packaged commodity. In case of yes, agriculture produce. So let us understand it with some examples. If the package is of 10 kg, yes, GST will be levied because it is below 25 kg. If it is of 25 kg, yes, it will be levied. If it is of 26 kg, it will not be levied because it is above 25 kgs. If it is of 50 kg, again, it will not be levied even if it is agricultural produce. No, there might be one situation. A vendor might say that I have a 50 kg package wherein I have packed 50 packages of 1 kg each. And I will sell these packages one by one. In this case, the FAQ has very clearly said that no, it will be considered as taxable because your ultimate aim is to sell the 1 kg packet, not the 50 kg packet. You will not sell this 50 kg or 1 kg packet with you. You will be selling 1 kg. You will not be selling that 50 kg packet. So your ultimate aim or your ultimate purpose behind packing this is to sell in 1 kg packet, not so the law has clarified, the FAQs have clarified that in this case GST will be leviable. Now issues involved: whether GST levied in case a manufacturer sells pre-packaged and labeled goods to a distributor or a wholesaler. Yes, it will be levied. However, if the distributor also sells it in that manner only, suppose if the manufacturer sells in a package of 25 kg to the distributor by charging 5% GST, and distributor also again sells it to retailer in 25 kg package only, so he can always avail the ITC of the goods in that case, but he has to charge the GST. What if retailer purchases a package containing 25 kgs of rice by paying 5% GST to the retailer, to the wholesaler, and then sells it loose to the consumer in a manner that it does not fall within the definition of prepackaged and labeled goods? So this is a very interesting situation. What might happen that I am a retailer. I purchase rice from the wholesaler by paying 5% GST. After paying, what I did, I opened the package and kept it open. Now, if a customer is coming and buying half kg of rice from me, 1.5 kg, 3 kg, I am weighing it at the spot and I am selling it. So in this case, it does not fall within the definition of pre-packaged and pre-labeled goods, because when the customer is visiting the shop, the goods are not packaged. But will affect in this case. See, when the retailer purchased it from the wholesaler, he paid GST. So that has increased his cost by 5%. And that he will ultimately recover from the ultimate consumer. So next question: whether tax is payable if such packaged commodities are supplied for consumption by industrial consumers or institutional consumers. Suppose if some packaged commodities, if some commodities fall within the definition of pre-packaged and labeled goods, but they are supplied for consumption by industrial consumers or institutional consumers. In that case, the FAQs have also exempted, and the Legal Metrology Act also exempts these types of supplies. What if a dealer is required to make declaration in the Legal Metrology Act but does not do so? See, there might be situations. See, one thing is very clear, that before this notification came, very less people knew about this Legal Metrology Act. So there might be situation when the dealer is required to make a declaration in the Legal Metrology Act, but he is not complying with the Act. So non-compliance of the Act does not mean that he shall be exempted from payment of GST. He has to pay. He has to collect. His item is taxable. He cannot escape taxes. We have a query in our chat box. Packaged commodities, printed declaration, packed and not for retail through distinct person or manufacturer. Yes, industrial and institutional I have already clarified. It is exempted. Yes. Implications on contractors. These notifications, in case of any queries regarding pre-packaged and pre-labeled, kindly put it on the chat box. We'll answer it. No issue. Now, these recent notifications have also been has also affect is Mr. Rajendran. Do you have anything to ask? You can ask. You please post your query. I'll answer you even in the middle. So contractors are also affected by these new notifications. Earlier, see, already from 1st of January 2022, a big change was a big change was made in case of government contractors, wherein government authority and government entity, means works contract services provided to a government authority or a government entity, was being charged at 18% instead of 12%. However, with the recent notification, the government has made every works contract service, almost every works contract service to government and local authority to 18%. So now there is no rate of 18% in most of the cases, except some. So what are the items? I have listed down some in these two slides. Let us take issues. The change is only that the rates have increased from 12% to 18% even for central government, state government, or local authority. What are the changes in case of works contract involving predominantly earthwork provided to central government, state government, union authority, union territory, and local authority? In case of works contract involving predominantly earthwork, that means where earthwork was the predominant activity, I think the ratio was 70% if I'm not wrong. In those cases, earlier the rate of GST was 5%. But now these amendments have increased it to 12%. What happens if such work is subcontracted? It is also going to increase to 12%. The notification contains it. What about the transitional phase? Now, this is a $1 million question because all contractors are now in a loop as to how they will proceed further. Because there will be contracts which are almost completed. There will be contracts of which billing has taken place on 18th or 19th. So what will happen in those cases? They have to pay 6% extra, and the concerned department might not oblige them with reimbursement of the 6% extra GST, which is levied in further bills now from now onwards. See, GST law doesn't have any way out for this. The only remedy you can have is that in case you have completed your works up to 17th and your billing is going on in the department, you can submit your bill in the department on 17th with 12% GST. If your work has complete and it has complied with the time of supply rules. Please check the time of supply rules. If you are complying with that, then you can do that. If you submit it by 17th, then your GST will be 12%, provided you are complying with your time of supply rules. Let me be again clear. The next step which you can take, see, in every contract, there is a price escalation clause. So these are cases which are beyond your control and price escalation has taken place in the form of taxes. So you can submit a letter to the department that, sir, when we placed the tender, at that time, the GST rate was 12%, and we had no reason to understand that this could be increased to 18%. Thus, we request you to kindly reimburse us the 6% extra amount which we are required to pay. I think if you get it received from the government department, you will be in a stronger footing. Is it justified towards the contractors with existing contracts in hand? Logically, no. Logically, no, because when the tender was floated, the contractor has given the tender pricing according to the rate of 12%. But now when the rate is increased to 18%, I think it is not justified on the contractor. Okay, so there is a query regarding second question, whether retailer purchases by GST and sells customer, whether he shall be eligible to take ITC. Okay, Pankajji, what happens? Suppose a retailer has purchased in a 25 kg bag and he has sold it loose in 1 kg packages. So he is also liable to pay GST. In that case, he can always avail ITC of the tax paid to the wholesaler. That is very clear. Manufacturer supplies packaged goods exclusively for institutional customers to B. B resell those goods to institutional customer. As per LMPC rules, B supply is exempted. And what is the taxability? So A supplies for exclusively for institutional to B. B resells these goods to institutional customer. Okay. No, A has supplied goods to B for institutional customers. So A is always exempted. What is the problem here? See, what is the language here? The language here is are supplied for consumption by institutional consumers and industrial consumers and institutional consumers. So if the manufacturer is selling directly to the institutional industrial consumers and institutional consumers, I don't think there is any problem in that one. The law is very clear in that. It will be exempt. Okay. Now let us go towards the implication on hotel industry. There has been changes in case of hotel industry also. See, earlier, that means before 18/7/2022 up to 17/7/2022, the concept was that up to 1,000 rupees per day of room rent, there shall be no GST, and the GST shall be exempt. From 1,001 to 7,500 per day. From 1,001 to 5,000, it was 5%. From 5,000 to 7,500, it was 12%, and above 7,500, it was 18%. But now it has been changed, and the law says that from rupee 1 to rupee 1,000 per day, it will be 12%. From 1,001 to 7,500 per day, also it will be 12%. More than 7,500, it will be 18%. Okay, so now there is no exempt room rent in case of hotel industry, and the minimum rate being 12%. However, there are some confusions in the minds of professionals and businessmen. Let us discuss it. Okay. The confusion is that what happens in case of those organizations and institutions which are providing charitable services to society, like dharamshalas, and charging concessional rent. Are they exempt? Still exempt when the rate has been increased in case of some room rents and levied in case of up to 1,000 room rent. So my submission is that charitable organizations which are registered under Section 12AA of the Income Tax Act are exempted under a separate entry. And this amendment will not be impacting those organizations. So in case an organization, a social organization is maintaining a dharamshala, in that case, GST, if it is exempt by virtue of they being registered under section 12AA of the GST Act, they will continue to be exempt under the provisions of GST also. Okay. Okay. Now there has been some changes in case of goods transport operators. Notification number 03/2022. It has changed. It has made some radical changes in case of GTAs, wherein an option to charge forward charge of 5% is also given to the GT operators. See, earlier, what was the basic rate for GTAs? Either they have to go for reverse charge, where the recipient of service will pay reverse charge at the rate of 5%, or the GTA can go for a with ITC rate of 12%, where the recipient of service need not pay any GST, and he shall be the GTA can avail ITC. However, now the GST, the notification has introduced some changes. The first, a GTA can remain in the existing scheme of reverse charge mechanism. That means it can, the recipient of service will pay 5% GST, and no ITC can be availed by the GTA, because the GTA is not liable to levy the GST or charge GST as output tax. So GTA can stay in the existing scheme also. However, now they have been given an additional or extra entitlement, wherein they can charge 5% GST under forward charge mechanism. That means a GTA can levy 5% GST, charge 5% GST in their bills from the recipient of services. However, there is a condition that the GTA, while paying this output tax, cannot avail ITC. However, the recipient of service can avail the ITC passed on by the GTA. What we get? GTA has to pay the GST in cash, but the recipient of services can always avail ITC of the GST paid by him. Next option is for 12%, wherein the GTA will be given an option to charge 12% GST rate, and in this case, the GTA can avail ITC as earlier. And the recipient of service can also avail ITC. There is no legal, there is no issue regarding that. And this scheme was already there. However, there is a condition wherein every year the option has to be exercised by the GT. That means if the GTA wishes to pay GST on the services, that means on forward charge mechanism, it has to make a declaration in Annexure V on or before the 15th March of the preceding financial year. That means for the financial year 23-24, we have to make the declaration by 15th of March, after which we have to stay in reverse charge mechanism. For the current year, the option is to be exercised by 16th of August 2022. Residential dwelling. Again, in case of residential dwelling, there is a big change. Mr. Hemant Jain, can you explain why any GTA will go with 12% GST option when he has option to pay only 5%? Please throw some light in this. Sir, this will depend on the business dynamics, because and his outward supplies, like the nature of customers he has. If he has more industrial customers and he has ITC with him, if he has a huge inflow of ITC because of the nature of his services, then he might wish to go for 12%, or 5% rate without ITC. He has to go and he has to pay entire tax on 5%. on cash. So that will depend on his business dynamics. Under all three circumstances of GTA, can recipient of service? No, sir. The recipient, oh yes, recipient of service, yes. Recipient of service can claim under all the circumstances. When it is in reverse charge, the recipient of service will pay 5% GST and he will always avail. If it is 5% forward charge, he can always claim ITC. If it is 12% forward charge, he can always claim ITC. So in all the three circumstances, ITC can be claimed. Now let us come to residential dwelling. Earlier, services by of renting of residential dwelling for use of residence was exempted. However, now this line has been introduced, whereas it says that except where the residential dwelling is rented to a registered person. That means if the residential dwelling is rented to a registered person who is registered under the GST law, in that case, the same will get taxable in the hands of recipient of service. And suitable amendments have also been made in notification number 13, 2017 relating to reverse charge mechanism. And entry 5AA has been introduced. And services by renting of residential dwelling to a registered person is introduced therein. Now, what are the issues involved? Suppose I am a proprietor and I have taken a house on rent for my personal residential dwelling. So will it be taxable in this case? Will it be taxable? I am not claiming it as my business expenditure. Though the language is not perfectly correct, but the intent of the section is not to tax any business expenditure because that will not come in your PL account. That will be in your personal expenditure. So that should not be taxed and that cannot be taxed at any cost. Now, there are some welcome clarifications in case of, excuse me, in case of utilization of electronic credit ledger balances. See what was happening now. In case of scrutinies and assessments, when a demand was raised and there was ITC balance in our credit ledger, the officers used to insist payment from the cash ledger, saying that ITC is not allowed, though there was no specific guideline for that. And the law was very clear that ITC or cash, anything can be used for payment of output tax. So this clarification has been issued by the department, wherein it says that tax, output tax, whether self-assessed or payment payable as a consequence of any demand, can be made by utilization of ITC. However, RCM, interest, penalty, fee, or repayment of erroneous refund has to be made in cash. They cannot be made in through credit ledger. Similar clarification has come for electronic cash ledger, where it says that any sort of payment under the GST law, may it be interest, tax, penalty, fee, or any other amount under the GST law, can be made through the cash ledger, which is very clear. So these are clarificatory and welcome moves by the CBIC. Okay. Now let us come to one more clarification which has been issued by the CBIC by way of a circular. See, this fake invoicing is a big menace which we all are forced to face now. An innocent taxpayer is also in that is in more danger than a guilty one, because a guilty person has a better planning than an innocent one. So we have to understand the pros and cons of everything. What is fake invoice? There are two conditions. There was a SOP issued by the government which defined fake invoice, which said that Fake invoice is an invoice issued without actual supply of goods and services or without payment of GST. That means invoice has been issued, but there are no underlying goods or services behind it. So it is just an accommodative transaction, or goods have been transferred, but there is no payment. There is no intent of payment of GST. What are the types of fake invoices? No underlying goods or services, diversion of bills, shell companies. These are the mechanisms. Now, how a fraud is committed? See, from A to I, this is the channel through which fake entities operate. A is a fully fraud entity from what we have understood over these years. And there is a series of chain. There is a chain of entities which ultimately issues invoice to an innocent taxpayer, who is then forced to pay fines and penalties because of the misdeeds of some other person. What are the motives? So these are the basic motives behind issue of any fake invoice: avoiding cash payment of GST, converting excess cash into ITC into cash, inflation of turnover, bogus expenditure, diversion of funds, or money laundering. Consequence of fake invoices. So section 16 subsection 2 shall disallow your ITC if you are availing any ITC from any fake invoice. Section 122 shall levy penalty or impose penalty on both the issuer and receiver of such bills. So both have to pay penalty. Your ITC might be blocked under Rule 86A. You might be summoned under Section 70. Or inspection search seizures might happen. The worst scenario is an arrest. So these are the consequences which any businessman might have to face because of a fake invoice. Let us understand how the law proceeds. Section 16(2) clause B says that the goods and or services or both has to be received. And C says that the tax has to be paid. So fake invoicing operates against these two rules or these two provisions of the vesting conditions of the ITC. Because in case of fake invoicing, normally neither there is receipt of goods or services and there is no payment of tax also. Let us take some cases, and these are the cases which have also been covered in the circular issue. Suppose company A issues invoice to company B and there is no supply of goods or services. What is the liability of A and B? See, what has happened in this case? Company A has issued invoice to B without any supply. That means there are no underlying goods or services. So it doesn't fall within the definition of supply itself. When it doesn't fall within the definition of supply, how can GST be levied? Tax cannot be levied in that case. And the circular clarifies this, that when A is selling goods to B without any supply of goods or services, there is no supply and hence tax cannot be levied in this case. However, penalty under section 122 can always be levied and can always be imposed on such persons. So in case of company A, penalty under section 122 can always be levied, but proceedings under section 74 cannot be initiated. Now, what about company B? Company B has availed the ITC. Now, if company B supplies goods to company C and it utilizes this ITC in payment of taxes, company B will have to reverse the entire ITC. Along with interest and applicable penalty has to be paid. Let us go to another case. Company A issued invoice to company B without any supply of goods. Company B utilized the ITC passed on by A and issues invoice to company C with the underlying goods. What is the liability of C? Because A and B we had already discussed. Let us see what is the liability of C. Because C is the person who has genuinely purchased goods from B. C has received an invoice under section 16. The first condition is receipt of invoice. So he has received an invoice which is complying with the provisions of the GST Act from B. He has duly received goods, physical delivery of goods from B. He has his e-way bills with him. He has his transport lorry receipt with him. He has his transporter payment details with him. He has the entire trail of the vehicle with him. So he is a genuine purchaser. How can he ascertain as to what type of purchase B has made from A? That is not possible for him. So when C is a genuine purchaser, department, what it does, it goes to C and says that the item which you have purchased from B, now B is a non-existent entity or is an issuer of fake invoice. So you have to reverse this ITC. Now what they are doing is that they are taking refuge of section 16(2)(c) in this case. The tax has to be paid. But what is the mistake or what is the non-compliance which Mr. C has done? He has followed the entire all the provisions of law. He has purchased goods from Mr. B, who has a valid GST registration issued by the government. But still, he is forced to face departmental proceedings, and in many cases, demands are also coming up. But the circular is silent on C. The circular doesn't say anything, and this litigative point still stays here. So there are many issues in case of fake invoicing, and unless and until these issues are solved and properly addressed by the department, I think we are not going anywhere. Let us understand one more aspect. We professionals, we work in a fiduciary capacity. In some cases, we are given database by the clients. We file returns or represent our clients in some cases. However, please see the language of section 122(1) capital A. It says that any person who retains the benefit of a transaction covered under clause this and at whose instance the transaction is conducted, he shall be liable to a penalty of an amount equivalent to tax evaded. So what are the cases? Supply without invoice, issue of invoice in violation of law, ITC, availment of ITC without receipt of goods, wrong ITC in case of ISD. So these are the 4 circumstances which are listed. In these 4 cases, if any person retains the benefit of these fake transactions and at whose instance such transaction is conducted, that means the person who is retaining the benefit, the transaction should be conducted at his instance only. At his instance only. Okay, there is one query. How to safeguard C, which is similar situation faced in VAT scenario. See, the only proper manner to safeguard C is to maintain proper documentation. You have to maintain proper trail of the goods which are coming. You have to maintain if possible, the fast tag data of the trucks which are pouring in. In that case, there is all probability that the honorable courts might give you the required relief. There are many judgments in our favor. Even in VAT regime, as you are referring, Arise Industries case was one. DY Bethel in recent GST regime, there is one such case law. And there are many other cases which are pending in the honorable courts. And we are very much confident that the honorable courts will definitely provide some relief in these cases, because these are impossible. This is an impossible duty. How can a buyer ascertain as to whether the supplier has paid tax or not? My duty is only to pay the consideration amount. If I can prove that I have genuinely purchased the goods, I think the courts should and the courts may give required relief to the SSEs in these cases. So this is the only manner to save C at this moment of time, because the notification or because the circular doesn't clarify anything in this respect. So we as professionals, when we are working, we have to be very much vigilant as to how we are working, and please maintain proper documentation. When you are filing GST returns of any client, please make sure that you have a representation with you as to what is your scope of work. Because this penalty or prosecution might happen only when the transaction has been initiated at the instance of any person. So if you are not the person who is behind the or what we call as mastermind, then these sections cannot get invoked. However, there might be a bad day for anyone. So it's better to maintain proper documentation for every transaction, every assignment which you take up. There is a similar provision in case of section 132 also, wherein a person who commits or causes to commit and retain the benefits, he is also punishable. See, these are the provisions. I am not going in detail because we have very less time now. Provisional attachment, section 83. Provisional attachment rules are also applicable in case of any other person. So the department can attach the property of the SSE or any other person if it is required for the protection of the interest of government. So please be very cautious in dealing with such cases. See, GST is one law. However, in case of fake invoicing, there is one more section under the Income Tax Act, section 271 AD, which specifies penalty for false entry in the books of accounts of the SSE. The section says that if it is found that in the books of accounts maintained by any person, there is a false entry. There is a false entry. Let us concentrate only in case of false entries, because the issue of fake invoicing is pertaining to this false entry. And the assessing officer may direct that any other person who causes the person referred to in subsection 1 in any manner to make a false entry shall pay by way of penalty a sum equal to aggregate amount of such false or omitted entry. So the SSE will be charged with a penalty of 100% of the bill value. In case of GST, the penalty is only of GST value. Suppose the bill value is of 100, GST is of 118 rupees. So the bill amount is 118. In GST, the penalty is 18 rupees. But in income tax, the penalty is 100 rupees. So We have to be all the more careful in dealing with cases. Please maintain proper documentation. Documentation, we have SQCs with us for proper documentation. ICAI has issued many SQCs. If we follow those SQCs, I think we don't need anything else. So whenever we advise clients for dealing with these things whenever we advise clients who are facing these types of charges, I think please make proper documentation, check the proper trail, check the proper transport entries, whether the goods have been received, and then represent with the government, with the department. Any queries? No, there is no query. Let us go to inverted duty refund. And one more thing I'd like to add in these cases. When we as professionals represent, let us be very clear that we will always represent the person who is honest. If we make that resolve or decision in our mind, I think the law will be a better place for us, because whatever amendments have come now, these amendments have come because of the evil designs of a few people, and the entire business community has to suffer because of these things. So let's come to another important amendment which has come in case of inverted duty refund. See, section 54 allowed refund in case of inverted duty. ITC accumulated in case of inverted duty. Suppose your output tax is 12% and your input tax in case of your inputs is 18%. So ITC was getting accumulated in these cases. However, there was a view, the government said that, see, the definition of input is only relating to goods under section 2, subsection 59. However, thus inverted duty refund will be eligible only in case of ITC on output goods. But there was another view which said that there is no difference between goods and services, and ITC can be availed even in refund should have been eligible or also in case of services. The Madras High Court took up this issue. Gujarat High Court also took up this issue. Finally, the Honorable Supreme Court in case of VKC Footsteps India Private Limited said that the GST Council should rework on the formula for calculating refund. Finally, the formula was considered by the Honorable GST Council, and a welcome step was taken wherein the formula was redrafted, and the earlier formula, which was a bit in favor of the revenue, it has been rationalized a bit, and the refunds shall increase in case of this formula. So there are some questions. Is the GSTI 2A the only control we should recommend our clients? See, GSTI 2A is one manner in which you can control these issues. There are many other issues also. Like I said, please maintain proper documentation of the transport receipts and the trail of the transportation. FASTag is a very good database for you. As regards citation, Arise Industries is one citation that is of the pre-GST regime. DY Bethel is one citation that is of the recent GST regime. There are many other citations, and we are confident that some more favorable judgments should come in favor of the SSC, because the law, erstwhile law, was very clear in this one after the judgments. However, there has been some ambiguities which we expect in the times to come. These will also be clarified. The changes made this time were very welcome in nature because they were clarificatory in nature. Many old disputes have settled down because of this, and many future disputes can be avoided because of these clarifications. We expect that the remaining issues also get solved. And with this, I close down my presentation for today. If there are any queries, we can always take. My client has received goods, bills, e-way bill, and transport receipt from supplier, and it was paid through check. 20% payment was held back till GST 3B. Now department is fake as per internal order and is. See, this is the problem which is happening. We understand, but in this case, you have no other option. If you can prove the trail of the goods which you have received. Suppose your goods have come from Delhi to Haryana. So if you can prove the transit route of the goods through FASTag data or any other data, that will be an added advantage for you. Representing before the authorities, if they accept, it's okay. If not, you have to move to the High Court. You have no other option in these cases.